Upon reaching the $1 trillion company market cap recently, Tesla smashed several records. For example, it became the first ever company with junk bond rating, which means the company debt are not the safest bet out there for investors to achieve this remarkable feat. It also became only the 5th company in the world to achieve the $1 trillion valuation mark, putting it up there with names like Google and Microsoft. Not only that, Tesla went on to become more valuable on the market as a company than every single energy company on the S&P 500 index, some of America's biggest companies. Yes, that includes big names that you probably have heard about like ExxonMobil and Chevron. But the big question here perhaps is, how did Tesla get here, and so fast at that? Today on Tahmid Talks, we find out precisely that. If you enjoy investigative videos like this, please do hit the thumbs up, subscribe, and leave a comment to support the channel. To understand the answer to those questions, we need to take a quick look at the past of the revered leader and meme stonks revolutionary all-in-one, Elon Musk. Elon came from a well-off international family with a Canadian mother and a South African father, with most of his post-secondary education and early entrepreneurial ventures starting off in the United States of America. After finishing his bachelor's at the University of Pennsylvania in physics and economics, he would launch a software startup with his blood brother called Zip2, and some financial support from close family and friends, which was shortly after sold off to Compaq, a computing giant at the time, for a cool $307 million USD, amidst the height of the dot-com frenzy. Buoyed by this successful exit, Elon set his sight on online banking with a new startup called X.com, which would later go on to become PayPal, which he again sold quickly in 2002 to eBay for a tidy sum of $1.5 billion. Having become a multi-millionaire at a young age, Elon was definitely not content with riding into the sunset and sipping pina coladas on the nice beaches. Instead, he took his PayPal exit money and launched right into aerospace with a brand new company called SpaceX in 2004. Which, as you would probably know, is still around today and going strong in the private space tourism sector. Somewhere along the road, Elon became deeply interested in the alternative clean energy space, becoming CEO of his biggest hit to date, Tesla, in 2008, as well as founding SolarCity in the middle around 2006. Early success gave Elon a taste for serial entrepreneurship, and with SolarCity fluttering with declining sales and staff count, eventually heading towards bankruptcy until Elon would use Tesla shares and cash to buy out in a controversial maneuver for $2 billion, turning it into a subdivision called Tesla Energy. Elon continued to diversify in the mid-2010s into Hyperloop transportation and OpenAI with Neuralink, and even a non-profit called OpenAI. Not to mention the relatively new Starlink project to bring internet to every place on Earth in partnership with SpaceX. Aside from the many startups, some tragic life events helped shape Elon as a person, such as getting badly bullied to the point of injury sometime during his school life, as well as a bout with seeking employment during the tech boom and being rejected by the likes of Netscape, as well as at one point during this time starting a PhD at Stanford in the material sciences, only to drop out on the second day, realizing that there was more money to be made in Silicon Valley. But let's shift our focus back to the company that has made Elon well known to both sides of the Pacific, Tesla Inc. Some of you might not know this, but Elon is not the founder of Tesla Motors Inc. In fact, it was founded in 2003 by Martin Eberhard and Mark Tarpenning. Elon actually became involved first as an investor around 2004 as a majority shareholder and chairman of the board, putting in $6.5 million. He became a very hands-on partner, helping with the development of the early electric Tesla Roadster model. And with the rise of the internal strife within the company, he would go on to sue the original founders to be included as a co-founder in the paperwork for Tesla, as well as assume the CEO and chief architect role in 2008. Tesla really kept going with the cars and at one point truck with mixed success, such as the launch of the mimerific Cybertruck in 2019 and a nice but more expensive crossover Model Y recently in 2020. Not to mention a few Tesla gigafactories propping up around the United States and even China to manufacture lithium-ion batteries for the cars and trucks now and those to be. Now, where this story gets even more interesting than a company with some nice tech and electric cars quickly taking market share in developed economies is the almost cult-like community following of the stock on the internet and its die-hard believers at any cost. So now, the stock hit the public exchanges for trading and investing in 2010, and in a decade, it has gone ballistic to say the least, especially since 2019, reaching the status of the most valuable automaker in the world in the summer of 2020 during the pandemic. Now it is worth more than all the other global car manufacturing companies combined. No car company, not Toyota, not Mercedes, could even think of a $1 trillion valuation, yet Tesla stock has skyrocketed the company there. And most of those gains have actually come during the pandemic lockdowns, well, in North America at least from mid-March 2020. If we take a close look at the Tesla stock chart, the lifetime from IPO day up to mid-March point of 2020, the upside is roughly 2,500%, which is an astonishing rate of return over a decade. But here is where it really goes crazy. In 1.5 years since then, the stock's total gain now sits at 30,000%, making it one of the best returning stocks of all time. Probably the best returning stock of all time with the lowest revenue ever. Although true believers will tell you that it is the community, story, and the future revenue potential that really matters for Tesla. But to put it into some perspective, Tesla sold about 500,000 cars worldwide in all of 2020. While revenue in recent years have grown at a healthy rate, it reported a total sales of around $32 billion in 2020. And all being said, Elon has put forth some gutsy projections, forward-looking sales figures, and growth initiatives, so we will see how high this roller coaster goes. For example, he anticipates selling 20 million electric vehicles in a single year by 2030. This could all be possible if they can keep fending off competition and staying as the top dog in big EV markets globally. The thinking for Tesla investors is that with such hypergrowth, stock valuation should not matter much, but for the value investors, Tesla is a hard pill to swallow, as its current $1 trillion valuation, for example, means that stock trades at a price-to-earnings ratio of around 380, price-to-sales of around 30, and price-to-book of around 45. Bottom line, even with the current growth projections baked in, Tesla is one of the most expensive, if not the most expensive stock you can find on the American market. All told, this video is not a recommendation to sell, buy, or hold Tesla stock. This channel is not meant for that. I'm just giving you something for you to think about so you can do your own due diligence and make your own decisions. Tesla is a story that I will definitely keep a close eye on going into the future, because it is a real-time case study of how far stock valuations can be stretched and how the new energy world might look like into the future. If you want more great stories like this, please do subscribe to my channel. This is Tahmid signing off. I hope to catch you on the next one.